Look closely at your bank account, and you will notice something deeply unsettling. You are earning more than your parents ever did at your age, yet you feel completely broke. The math simply does not add up anymore. We have been conditioned to believe that if you just work harder, climb the corporate ladder, and check off the traditional boxes of American success, financial security will follow. But the game has changed completely. The old rules are dead. In today's hyper-inflated economy, things that were once considered smart investments, normal milestones, or harmless everyday comforts have transformed into lethal financial traps. They are silent leaks in your sinking ship, quietly siphoning away your freedom before you even have a chance to build it. But the real trap is much deeper. It is not just about the numbers leaving your account. It's about the psychological prison keeping you running on a hamster wheel that never stops. Sudden beat drop. The tone shifts to an urgent, investigative tempo. We are living through a massive economic paradigm shift where the middle class is being systematically hollowed out. If you keep spending money the way society expects you to, you are guaranteeing your own financial captivity. Today, we are pulling back the curtain on the 10 things that are absolutely no longer worth your money, backed by brutal mathematics and the hidden psychology of wealth. If you want to break free from the system and build real, unshakable wealth, you need to see these traps for what they truly are. Before we expose the very first trap, take a single second to hit that subscribe button. By joining us, you are choosing to master your money rather than let it master you. Let us begin. The first massive illusion keeping millions of hardworking people trapped is the trap of the brand new car. For decades, driving a pristine vehicle straight off the dealership lot was the ultimate symbol of middle-class achievement. Today, it is a certified financial emergency. The moment you drive that shiny piece of metal across the curb, it suffers an immediate, brutal blow to its value. Morgan Housel, author of The Psychology of Money, noted that misjudging the difference between looking rich and being rich is the fastest way to go broke. Let us look at the raw numbers. The average new car price has skyrocketed to over $48,000. If you finance that at a modern 7% interest rate over 60 months, your monthly payment is nearly $900. But it gets worse. Over the first 5 years, that vehicle will lose roughly 60% of its value. You are literally burning $28,000 in pure depreciation while paying thousands more in interest just to show your neighbors a temporary status symbol. And this is where most people unknowingly lose years of their lives. Think about what that $900 a month could do if it were channeled into compound interest instead of a depreciating asset. If you took that exact same monthly payment and invested it in a low-cost index fund averaging an 8% annual return, you would have over $65,000 in 5 years. In 30 years, that single decision compounds into a staggering $1.3 million. You are trading $1 million retirement for a piece of machinery that will end up in a scrapyard. The utility of a vehicle is to get you safely from point A to point B. In today's economy, paying a premium for the smell of new leather is a luxury the middle class can no longer afford. The second trap hiding in plain sight is the traditional 4-year college degree from a luxury university. For generations, the narrative was simple: go to college, get a diploma, and secure a high-paying career for life. But today, the higher education system operates more like a corporate predatory lending machine than a center of enlightenment. Total student loan debt in the United States has crossed an astronomical $1.7 trillion. Young adults are entering the workforce carrying $80,000, $100,000, or even $200,000 in high-interest debt before they even earn their first paycheck. They're starting their adult lives financially crippled, unable to buy homes, unable to invest, and unable to take risks.
When you factor in the rise of specialized online certifications, trade schools, and the democratization of information, spending a fortune on a generic degree is a losing bet. Unless you are entering a strictly regulated field like medicine or law, paying six figures for a credential that can be outpaced by real-world skills and self-directed learning is no longer justifiable. The return on investment has collapsed, leaving a generation holding expensive pieces of paper while working jobs that do not even require them. This brings us directly to the third drain on your wealth, the relentless trap of subscription ecosystem lock-in. We're not just talking about your streaming services anymore. Modern corporations have realized that the easiest way to bleed a consumer dry is through recurring monthly revenue. Your software, your gym, your productivity tools, your cloud storage, and even features inside your car are now locked behind monthly paywalls. It feels like small change, $10 here, $15 there, but this is microtransaction consumerism, and it relies on a psychological trick called friction-free spending.
Because the money is automatically deducted from your account, your brain does not register the pain of the loss. A recent study revealed that the average American underestimates their monthly subscription spending by over 100%. People believe they are spending $80 a month, but when you audit their bank statements, the true number is closer to $250. Over a decade, that minor oversight compounded at a standard investment rate equals over $40,000 completely vanished. If a service does not actively generate income or provide profound regular value to your life, it is an anchor dragging down your financial ship. The fourth item that has completely lost its financial validity is the concept of timeshares and vacation clubs. These programs are marketed using intense, high-pressure sales tactics designed to exploit your emotional desire for family memories and luxury experiences. They promise you a lifetime of guaranteed getaways and a valuable piece of real estate. In reality, a timeshare is a financial black hole. The second you sign the contract, its resale value drops to literally zero. Go to any online secondary marketplace and you will find thousands of desperate owners trying to give away their timeshares for a single dollar just to escape the permanent burden of annual maintenance fees. These fees rise faster than inflation, costing owners thousands of dollars every year, whether they use the property or not. You are paying a premium to lock yourself into a rigid vacation schedule while funding the corporate profits of developers. In a world with infinite travel flexibility through modern booking platforms, tying up your capital in a permanent, illiquid contract is a massive financial blunder. But the fifth trap is perhaps the most insidious, because it directly targets our health and social lives. The culture of organic premium food marketing and boutique wellness trends. Let us be entirely clear. Prioritizing your health is the highest-yielding investment you can make. As Warren Buffett famously said, you only get one mind and one body in this life, and you have to take care of them. But corporate marketing departments have weaponized this truth to create an elitist wellness industry designed to extract cash from self-conscious consumers. The grocery store aisles are flooded with products bearing expensive labels like artisanal, superfood, or non-GMO, often priced at a 300% premium over standard whole foods with identical nutritional profiles. You do not need to spend $15 on a bottle of cold-pressed juice or $80 a month on a branded green powder to be healthy. The actual foundation of physical wellness is remarkably cheap: whole grains, basic vegetables, clean water, and consistent movement. When you fall for the marketing hype of premium lifestyle foods, you are not buying health, you are buying an identity. You are paying for a social signal to show the world how health conscious you are, while your savings account takes a massive, unnecessary beating. Our sixth item takes us right into the heart of modern technology, the annual smartphone upgrade cycle.
There was a time when upgrading your phone every 12 months made sense. In the early days of mobile technology, each new generation brought massive, revolutionary leaps in utility, processing power, and camera capabilities. But today, consumer tech has reached a massive plateau. The difference between this year's flagship phone and last year's model is completely negligible. It might have a fractionally faster processor you will never utilize, or a slightly different camera bump, but the daily user experience remains identical. Yet major tech companies have masterfully engineered consumer psychology to make us feel obsolete if we don't hold the absolute latest device.
Financing a new $1,200 phone every year through your cellular carrier is a classic wealth-destroying habit. The carrier rolls the cost into your monthly bill, making it feel invisible, but you are essentially taking out a high-interest microloan on an asset that depreciates to near zero within a few years. Break the cycle. Keep your device for 3, 4, or even 5 years. The smartest financial move is to buy a high-quality device, care for it, and run it until the software updates completely stop. The freedom of not having a permanent tech bill attached to your name is worth infinitely more than a slightly shinier titanium frame. The seventh item on our list is a trap that catches millions of ambitious professionals: extended warranties and electronics insurance. Whether you are buying a television, a laptop, a kitchen appliance, or a piece of furniture, you will inevitably be hit with a high-pressure sales pitch at the checkout counter asking you to protect your purchase. The math behind these insurance products is completely stacked against the consumer. Retailers push these warranties aggressively because their profit margins on the actual products are razor thin, while the profit margins on extended warranties are often higher than 70%. They are selling you pure, unadulterated fear. Statistically, the vast majority of consumer electronics either fail within the manufacturer's initial warranty window due to defects or outlive the extended warranty period entirely without issue. By paying for extended protection on everyday items, you are overpaying to insure assets you could easily afford to replace out of your own pocket. Instead of giving your hard-earned money to insurance corporations, build a robust emergency fund. Become your own insurance company. When you self-insure your minor possessions, you keep the premiums, earn interest on that cash, and build a massive financial cushion that protects you from real-life emergencies.
This leaves us to our eighth item: cable television packages and premium sports bundles. While millions of consumers have cut the cord over the last decade, a surprising number of households still cling to massive, traditional cable contracts costing upwards of $150 or $200 every single month. They pay for hundreds of channels they never watch, packed with endless commercial interruptions designed to sell them even more things they do not need. Even the argument for live sports has disintegrated as streaming networks have systematically fragmented broadcasting rights. Tying yourself to a legacy media contract is the equivalent of lighting cash on fire. It is an outdated, high-cost delivery mechanism for entertainment that actively robs you of both your time and your money. Evaluate your media consumption ruthlessly. If you're paying a massive premium just to have background noise playing in your living room, it is time to cut the cord permanently and reallocate that capital to things that actually build your future. In the modern world, comfort has been entirely commoditized. With a single tap on your smartphone, a driver will pick up a meal from your favorite restaurant and bring it directly to your doorstep. It feels like magic. But the economic reality behind this convenience is devastating to your financial health. A simple $15 restaurant meal easily morphs into a $35 invoice once you factor in service fees, delivery charges, regulatory fees, driver tips, and menu price markups hidden within the app. You're paying a 100% premium just to avoid walking down the street or cooking a simple meal. If you utilize these apps 3 or 4 times a week, you are quietly spending hundreds of dollars a month on pure convenience. Charlie Munger always emphasized the extreme danger of small numbers compounding into massive losses. Over a year, a casual delivery habit can easily cost you $3,000 to $4,000 in pure, non-value-added fees.
That is money that could have fully funded an individual retirement account or wiped out a high-interest credit card balance. True financial freedom requires a willingness to embrace minor inconveniences, cook your own food, pick up your own takeout, and stop funding the profit margins of tech platforms at the expense of your financial independence.
Finally, the 10th thing that is completely no longer worth your money is the pursuit of fast fashion clothing and low-quality consumer goods. We live in a throwaway culture driven by rapid trend cycles engineered on social media. Online retailers churn out incredibly cheap garments designed to be worn a handful of times before falling apart in the wash or going completely out of style. It feels like a bargain because the initial price tag is so incredibly low, but this is a classic psychological trap known as the Sam Vimes boots theory of socioeconomic unfairness. When you buy low-quality, cheap items, you are forced to constantly replace them. A $100 pair of high-quality durable shoes will easily last you a decade with proper care. Meanwhile, a cheap $25 pair of shoes will wear out in 6 months, forcing you to spend $200 over that same 10-year period just to keep shoes on your feet. Buying cheap items is incredibly expensive in the long run. Shift your mindset entirely. Focus on utility, craftsmanship, and longevity. Buy fewer things, but buy things that are built to last. When you invest in quality over quantity, you break free from the endless consumer cycle and keep your capital where it belongs, working for you. Building true wealth is almost never about making a massive, spectacular fortune overnight. It is about the quiet discipline of eliminating the subtle financial leaks that society tells you are completely normal. Every single dollar you stop wasting on these 10 illusions is a dollar you rescue from the system. It is a dollar that can be invested, compounded, and transformed into absolute autonomy over your time. Remember the wise words of Robert Kiyosaki. It is not how much money you make, it is how much money you keep. Look at your spending habits with absolute, uncompromising honesty today. Identify the traps you have fallen into, cut them out without mercy, and take control of your financial destiny. Thank you for watching this deep dive. If this perspective opened your eyes, leave a comment below telling us which of these traps you are cutting out of your life today. Don't forget to like this video and subscribe to the channel to join our growing community of financially free individuals. Your time is your most valuable asset. Stop trading it for things that are no longer worth your money.